If you want to retire early with $5,000 a month, you need about $1.5 million. But here's the crazy part. You don't need a huge salary to get there. Just imagine this for a second. You wake up on a random Tuesday, no alarm, no job, no stress. The day is completely yours. You could sit outside with your coffee, book a last-minute trip, or just enjoy a slow, peaceful morning. That's not just surviving. That's actually living. And $5,000 a month? That's $60,000 a year. For a lot of people, that's enough to live comfortably and freely. But I already know what you're thinking. $1.5 million. That's insane. That's for rich people, not me. And yeah, most people stop right there. They assume it's impossible because we've been told the same story our whole life. Work for 40 to 50 years, save whatever you can, and just hope things work out. But let's be honest. Salaries aren't keeping up. Everything is getting more expensive, and retirement feels more uncertain than ever. But here's what most people don't realize. This isn't about luck. It's not about being rich. It's about understanding one simple thing: how money actually grows. In this video, I'm going to show you how normal people are turning small, consistent investments into $1.5 million. No complicated strategies, no Wall Street tricks, just simple math and one powerful concept: compound interest. And once you understand this, everything changes. So now the big question: how much money do you actually need to generate $5,000 every month? This is where things get really interesting. There's a simple rule in finance called the 4% rule. And don't worry, it sounds complicated, but it's actually very simple. Here's how it works. You can safely withdraw about 4% of your total investments every year without running out of money for decades. So if you want $60,000 per year, all you have to do is multiply that by 25, and that gives you your number. $60,000 times 25 equals $1.5 million. That's it. That's where the number comes from. But here's what most people completely misunderstand. The goal is not to save $1.5 million and slowly spend it until it's gone. That would be stressful. The real goal is to build a financial engine. Your money stays invested, and you live off the growth it generates. Because on average, your investments grow more than the 4% you're withdrawing, which means your money keeps paying you, and it keeps growing at the same time. And this is what protects you from inflation. Because let's be real, $5,000 today won't feel the same in 20 to 30 years. Everything gets more expensive, but if your money keeps growing, your lifestyle stays protected. Now, some people argue about this rule. They say, what if the market crashes? What if returns are lower? And yeah, those are valid concerns, but that's exactly why we're using a conservative number. Because early retirement isn't about taking risks. It's about building something that lasts 40 to 50 years. So we stick with the 4% rule. Simple, proven, reliable. And now you have your target. $1.5 million equals financial freedom at $5,000 per month. But now comes the real question. How do you actually reach that number? Because saving alone won't get you there. And this is where everything changes. So now let's answer the real question. How do you actually turn small money into $1.5 million? Because let's be honest, saving alone won't get you there. This is where the game changes, and it all comes down to one thing: compound interest. Here's the thing. Compound interest is when your money starts making money, and then that money starts making more money. It's like planting a small tree. At first, nothing really happens. Maybe a few branches grow, looks slow, almost pointless. But over time, that tree turns into an entire forest, and suddenly, it's producing more than you ever imagined. And this is exactly how money works. Let's look at real numbers. Say you invest just $300 a month. That's about $10 a day. After 1 year, you've invested $3,600. Not impressive. After 5 years, you've put in $18,000, and it grows to around $21,000. Still okay, but nothing crazy. After 10 years, you've invested $36,000, and now it's over $50,000. Now it starts getting interesting, but here's where it gets really interesting. After 30 years, you invested about $108,000 total, but your money grows to over $365,000. Think about that. You didn't earn that extra money. The system did. And this is what most people don't realize. The real money is made in the last 10 to 15 years, not the beginning. Now let's scale this up to $1.5 million. There are a few different paths. If you invest $500 per month, it takes about 40 plus years. If you invest $1,000 per month, it takes about 30 to 32 years. If you invest $1,500 per month, you can reach it in around 25 to 26 years. And if you go aggressive with $2,000 per month, you could get there in just 20 to 22 years. Same system. Same math. Only difference? Speed. And here's a small mindset trick. Monthly numbers feel big, so break it down weekly. $500 per month equals about $115 per week. $1,000 per month equals about $230 per week. That suddenly feels doable, and that's the key. You're not chasing $1.5 million. You're just staying consistent every week, because once compounding kicks in, it does most of the work for you. And now that you understand this, we need to answer one final question. Where do you actually invest this money? So now you understand the math. You understand compounding. But here's where most people get stuck. Where do I actually invest this money? Because the stock market feels confusing, complicated, and honestly, a little scary. But here's the truth. You don't need to be an expert. You don't need to pick stocks. And you definitely don't need to predict the market. In fact, that's exactly how most people lose money. So let's keep this simple. There are just 3 things you need to know. First, where your money goes. Think of this like choosing a garage for your money. If your job offers a 401k with a match, start there, because that's literally free money. If your company matches 5% and you don't take it, you're losing a guaranteed return. After that, you move to an IRA. And here's where it gets interesting. You have 2 options. Traditional IRA, you save taxes now, but pay later. Roth IRA, you pay taxes now. But in the future, everything is tax-free. And for most people, Roth is insanely powerful. Then comes your third option, a brokerage account. No limits, full flexibility, perfect for building extra wealth, especially if you want early retirement. Second, what you actually invest in. Now this is the part people overcomplicate. You don't need to find the next Tesla. You don't need to guess winning stocks. Instead, you invest in index funds. And here's what that means. You're not betting on one company. You're investing in hundreds of companies at once. So if one fails, it doesn't matter, because the others keep growing. This gives you 2 huge advantages. Low risk, because you're diversified. Low cost, very important. And here's something most people don't realize. Even professional investors fail to beat simple index funds. So instead of trying to be smart, you just follow the system. Third, the most important step, automation. This is the real secret, because investing is not about knowledge. It's about consistency. Set it up once, $100, $200, $500, whatever you can, and let it run automatically, every week, every month, no thinking, no emotions. Because the biggest mistake people make is this: they start and then they stop. But when it's automated, you stay consistent without even trying, and over time, that consistency turns into serious money. So now you have everything. The goal, the math, the system. But there's one last thing that can destroy everything. So now you understand everything: the goal, the math, the strategy. But here's the truth. Most people still fail, not because the plan is wrong, but because of their habits. Let's talk about the biggest mistakes. Mistake number 1, lifestyle inflation. You start earning more, and you start spending more. New phone, better car, more expensive lifestyle. And suddenly, your income increased, but your savings didn't, so your life looks better. but your future stays the same. Here's the fix. Every time your income goes up, increase your investments first, because if you don't control your lifestyle, it will control you. Mistake number 2. Trying to beat the market. This is where people get emotional. Market goes down. They panic and sell. Market goes up. They jump in late, and this cycle keeps repeating. But here's what most people don't realize. The biggest gains in the market happen in just a few days. Miss those days, and your returns collapse. So instead of trying to be smart, just stay consistent, because it's not about timing the market. It's about time in the market. Mistake number 3, ignoring fees. This one is dangerous because you don't see it. A 1% fee might sound small, but over 30 years, it can cost you hundreds of thousands of dollars. That's money silently disappearing. That's why low-cost investing matters. Mistake number 4, waiting too long. This is the biggest mistake of all, because time is your biggest advantage. Someone who starts early with less money can beat someone who starts late with more money. That's how powerful compounding is. So if you're waiting for the perfect time, there isn't one. The best time was yesterday. The second best time is today. Now, here's the mindset shift. This isn't about saving money. This is about buying your freedom. Every dollar you invest is one step closer to a life where you don't have to work. And here's the truth nobody tells you. This process is boring. No excitement, no quick wins, no shortcuts. But that's exactly why it works. Because while everyone else is chasing fast money, you're building real wealth. And if you just stay consistent, this becomes inevitable. You don't need to be perfect. You don't need to be rich. You just need to start and not stop. Because $1.5 million is not built overnight. It's built through small decisions, repeated over time. So here's my question for you. What's the first step you're going to take? Are you going to start investing, cut expenses, set up automation? Comment below, make it real. And if you want more simple, no BS strategies to build real wealth, subscribe, because we're just getting started.